Welcome to the Special Situations podcast. Today I've got a very special guest. It's Mariusz Skonieczny. Hope I didn't butcher your name there. You're of the website Classic Value Investors, and you have a very interesting YouTube channel that you're developing while you're stuck at home. Hi Mariusz, welcome.
Yeah, hi, how are you? Thanks for having me.
No, it's great to have you. Yeah, it's my pleasure. Well, to start off this podcast, maybe you could tell the audience a little bit about yourself, how you got started in investing, and what's kind of your style of investing. And I know you have a very particular style.
Right, so in 2003, I graduated college, and I was always interested in investing, but first I entered the real estate industry, a commercial real estate industry. So I was a real estate appraiser, so learned how to value properties. Then I became a commercial real estate broker, which
But
kind of
you
used
don't.
my.
So sorry to interrupt you already in your intro, but you don't really use the real estate skills anymore, do you? Like that you value real estate on the balance sheet a lot?
Well, I mean, valuing anything is valuing anything, right? When you look at commercial real estate, you value it based on income. Um, but during this entire time, I was also interested in stocks. And when the 2008, 2009 financial crisis was happening, I literally went to my boss and I said, I'm quitting and I'm starting Classic Value Investors. And that was my last day was December 31st, 2008. And my first day of Classic Value Investors was January 1st, 2009. So
Oh,
just, started in the middle of the entire mess.
yeah, that sounds like a brave point in time to quit your job, just like that. Was it a hard
Right,
decision?
right. Well, I guess you know, it just suits my personality to, to go where the fire is.
So that just excited you a lot more to go out on your own
Well, I
and.
mean, think about it. People are interested in stocks when everybody else is interested in stocks, right?
Mhm.
So, they were saying, "How crazy are you? Why would you want to be buying stocks during that time?" Well, that's exactly when you want to be buying stocks. The
Mhm.
famous quote by Warren Buffett: "Be greedy when others are fearful, and be fearful when others are greedy." Right?
Yeah,
And I
but
guess,
yeah.
uh, I guess for some people, this kind of thinking, um, I don't know, it comes natural because of their personalities, and I feel like my personality suits this kind of style of investing.
So that's puts the classic in classic. You're a real classic value investor in that sense. Like you have that gene of everybody is running out of the mess, and now I wanna go in.
Yeah, that's right.
Cool. And so you must have been pretty young at that time. Did you already study Buffett, or how did you come to this realization that
Well,
2009 was like?
first of all, when I graduated college, I had a finance degree, so
Mhm.
I was already aware of investing. And as part of the finance degree, they do make you take finance, accounting, and valuation courses. So at that point, I was already, reading about that kind of stuff.
Right. Well, I think that's not, I don't think all people who do a finance education would have had that knowledge, or more of them would have done well. But that's cool.
Well,
Did I?
more of investing, in my opinion, is what you learn on your own. No
Hmm.
one is going to teach you, and there is so much you can read. Right? There's a lot of books on
Yeah.
value investing that you can read, but then at some point you have to put the books away and go to work and study the individual companies. That's where you really get an edge. That's where you really learn how to do things and make mistakes and learn from them.
Yeah, and you've actually written quite a few books yourself. People can find them on your website, and one of the earlier ones is about scuttlebutt, right?
No, my first book was Why Are We So Clueless About the Stock Market? That was my first
Hmm.
book. That's I mean, I literally wrote it during that financial crisis of 2008 and 2009.
Okay, but yeah, I just meant that it was like one of the earlier ones. Thought it was your second. I don't know in what order they were listed, but
Right.
and
On my website, they're not listed in the order of publication. They're
okay,
I don't know if there's any rhyme and reason. Just
okay.
they're just listed.
Yeah, that one, the Scuttlebutt one, kind of stood out to me because I watched quite a few of your videos, and you've interviewed like CEOs and the president of Scorpio Tankers. So I really recognize that as something that you seem to actively use.
Well, that's actually when you think about commercial real estate. That's actually when I mean, some people ask me like, Scuttlebutt, did you get it from Phil Fisher? And actually, I started doing Scuttlebutt before I learned about Phil Fisher, because when you are in commercial real estate and you are valuing properties, you get financials from the owners. And since commercial real estate is private, I mean, those financials are just a complete mess, and half of it is just a bunch of lies. So you take those financial statements and you have to confirm everything. And how do you confirm everything? Well, pretty much by doing Scuttlebutt. That's what value in commercial real estate is about. You have to get on the phone. You have to make sure that the real estate taxes that they are saying they're paying is actually what they're paying. So you get on the phone, you call the assessor, you call other competing properties in the area to make sure that the rents that they're getting are true rents in the market. So you kind of do this kind of detective work in that field, so that when I started investing in the stock market, like immediately, I just started doing it without even realizing it. I mean, yeah, I mean, most investors just go and read the company's financials, 10Ks, 10Qs, and just take it at face value. And I'm not
Mhm.
saying that the public companies are lying, but annual reports or the websites, it's like a advertisement from the companies. They're trying to sell you on the idea of investing in their business. So of course I read that, but that's mostly they just give you the good parts, and you learn the dirty parts when you get on the phone and you start to uncover the whole story.
Sure. And then, would you say that like in commercial real estate, maybe a lot of them are like smaller owners, I guess, not huge companies, that some of it is maybe not on purpose, but they're kind of unprofessional in how they kept records, or is
Well,
it real
it's
malice?
unprofessional. You're right, it's unprofessional. And also, if let's say uh, the owner wants the property to appraise or value at a certain level, because let's say they want to get a loan, right?
Hmm.
So the highest the value, the highest the loan they can get. They might conveniently forget about some expenses, right?
Sure. Yeah.
Or they might run like the repairs and maintenance expenses through their personal credit card and not show it on. So you have to have an idea of uh, what the type of property it is and the type of expenses it should carry based on your experience with other properties. And
Yeah.
you can't just trust. And a lot of times the owners conveniently forget, like, for example, well, what's the management expense? Well, I manage the property, there's no managed expense. Well, okay, just because you don't pay yourself doesn't mean it doesn't exist, right? So
Sure.
you have
Yeah.
to estimate, and you have to also look at things like, well, what about replacement cost? At some point, you're going to have to replace the roof, or HVAC. The capital expenditures like this,
Sure.
they don't show up in the income statement. So they conveniently say, "Oh, we don't have any capital expenditures." Well, just because you don't have them right now doesn't mean they don't exist. So,
Right.
and so you have to do this kind of work. You have to know what you're doing, and take the expenses that they give you, and match it with with other things that you think should also be there.
Yeah, you know how to build an objective picture. I'm not sure, sometimes maybe appraisers are working for a party that really wants them to show a bright picture, and then I can imagine that appraisers could be a little bit biased, and the other way around, if they're working for a bank or something, they may be a little bit more critical. Or is there like a real code of honor to be as objective as possible. Think you've disappeared for a sec. Mariusz?
Can you repeat the question again? Because we cut off.
Sorry about that. I was just wondering if, like, is there like an objective line that appraisers would like toe to, or if you're hired by one side, would you skew it a little bit that way, and if you're hired by the other side, skew it a little bit that way, or how does that work?
Yeah, there's a lot of that kind of stuff going on, of course.
Okay, yeah. Okay. And then stocks are a little bit different from real estate, and in that sense that I think there's like a much wider range of like these hidden expenses or things that can be manipulated. I mean, if you're gonna become an expert at real estate, I think at some point you get a real good sense for what a building is worth. But that's tougher with we'll be talking about mining and shipping. Would you agree, or do you see it differently?
Well, with the public companies, you don't have the unprofessionalism. The financials are supposed to be audited, so you don't necessarily have to. They can't really leave out some expenses the way they can with private businesses or private real estate. But the way I
record, and we're back. We just had a little bit of technical difficulties. Mariusz, I was just talking to you, and one thing that really stood out to me about your style of investing is that you seem to have a lot of fortitude for like enduring volatility. You talk about it quite a bit, and I mean, you're also active in sectors that exhibit a lot of this volatility. What is that, a conscious choice, or how did that happen?
Well, when you are dealing with small cap companies or micro cap companies, just by their nature, they are less liquid than the big names, so they're going to be volatile. You can have one seller one day decide to sell a bunch of shares and knocking the price down by 20% or 30% within minutes. So that's kind of comes with the space.
It comes a little bit with the space, but I mean, not with all the companies you are interested in that I've seen, but like shipping and tankers are pretty extreme in that sense, right? They tend to use a lot of debt. And
well, when you think that volatility in the shipping sector is extreme, you haven't been involved in the junior mining space.
Right. Because would you like to play there? Like, this is for you, that's, you enjoy it, or almost?
I mean, I wouldn't say I enjoy it. I mean, volatility is like getting punched in the face. So I can't say, yeah, it's very enjoyable to get punched in the face. No, it's just, I feel like, I'm at the stage in my life where I am building my wealth, growing it fast, and that at a faster rate than regular stock market returns. So if you want that kind of return or possibility for that kind of return, the price that you pay is volatility. If you don't like volatility, then invest in the less volatile names, but then the price that you pay for that is lower returns.
Sure. So there's you're really looking for the highest return you can find, and you're willing to endure the volatility to get it.
Yeah, that's right. That's the that's the price you have to pay.
Sure.
I mean, think about it for a second. If you're in just a regular business and you're making I don't know, furniture, what do? You go and get a bunch of wood, you cut it up, you put it together, and you sell it. So what you're doing is by doing this work, you are building value for someone else, right? and they pay you for the value. When you're buying a stock, you're not providing any value to anyone. You're just buying a stock, right? So, but you can provide the value to someone else. Why would someone sell you a stock today? Well, if the best person to buy the stock from is the person that thinks it's going to decline in the short term, they will sell it to you. So you provide a service for them. You take away the fear, and for that service, you get a good price.
Sure. So you're deliberately seeking out that seller, because I've heard you talk about that too, that you're looking for like bored people as well that are sort of totally fed up with stocks they're in.
Well, the best sellers are the ones that are exhausted, disappointed, pissed off, whatever. I mean, they're the most likely to give you a good price. Sellers that are happy, enthusiastic, and see nothing but bright future for the company, you have to pay them a lot of money for them to part with their shares.
For sure. And is it in your process, like when you're looking for ideas, are you looking for those types of sellers, those parts of the market where maybe a little bit of that boredom is happening, or maybe that anger even? Or are you looking at value, and it often happens to be found in that territory? Like,
right, I'm looking at value. That's number one. And if I am able to buy it from an angry seller, that's a cherry on the cake. That's a plus.
Okay, yeah, I think it goes together like quite a bit, but it's I was interested in whether you approach it from one side or the other. It can be maybe more efficient, or
every situation is different. I have a list of hundreds of companies that I'm looking at. I studied them over the years, and when I have an investment situation where I sold and now I have money to deploy in something else, I already have 50 ideas to look at. And when you have a watch list, or I have a notebook of 200 ideas, you're almost guaranteed that there's someone out there who is not acting rationally and selling something for whatever reasons, whether they all of a sudden don't like the future, or maybe they sell it because they found something better, or they got bored waiting, or whatever it is. If you're looking at smaller companies, illiquid companies, they can be knocked down in price very quickly. So if I have a list and I watch them, I can take advantage of an opportunity.
Cool. And then I gather you're kind of concentrated investor, so you have like a passive list of 200 companies that you're keeping tabs on. And then how many companies would you say you put your portfolio into?
Well, right now I would say I have like 3 baskets. I have Oracle, I have Mitcham, and I have a little bit of GoldX, and then I have the tankers. So in total, you can say that there's like maybe 10 positions or something like this. But really, the tankers is like 1. So right now, I'm pretty much in 4 positions.
Right. So tankers is 1, and then Oracle is a copper play. GoldX is gold play, and Mitcham is geological services play, right? So
it's a play on a new industry, growth of the new industry that's both on the commercial side and military. So the military part kind of gives it a little bit diversified away from the coronavirus situation or the economy. The defense contractors are going to sell their products no matter what the general economy is doing.
Tends to be a little bit more stable cash flows. So that's very interesting. You actually have like 4 positions, but then I've also noticed you're kind of a long-term investor, right? You can really hold on to something for years, but isn't that difficult if you have this passive list of 200 ideas and they fluctuate quite a bit in value. Not tempted to trade like between those ideas, or how does that work for you? Or
Yes, so you're right. You're right. This is there's always a temptation, and people tend to do this. So over the years, I trained myself to just stick with the ideas that I have, because there's always something better out there. Always a new idea, always a new opportunity, and I just stick with my ideas for a longer period of time. And doesn't matter if there is something that's super more exciting. I mean, before COVID, um, I didn't make a single trade in 3 years.
Whoa, nice. And then so that, but unless
I mean,
something
should
really
sorry, I should have said I made trades, but that was adding to the position that I had. But I didn't switch around for 3 years. It was just the same portfolio for years.
okay. And so you may have added some incoming money, but you didn't really
Right.
trim one position, add to another,
Right.
that kind of stuff. Okay,
Right.
that's interesting. And so what would you say, what would make you sell? Like, is there something that would make you sell before like
Well,
3 years are up?
what made me sell some positions was COVID and the opportunities that presented themselves. Because from 2017 to 2020, there was really nothing that I was interested in. I had my watch list, but there was nothing that piqued my interest. And then when this COVID happened, then all of a sudden, a bunch of opportunities became available, and I took advantage of them. So that's one reason to sell. Another reason to sell is obviously your position reached a level that you were hoping for, then you sell it, or you made a stupid mistake and you sell it at a loss, which of course happens to all of us.
Sure. Okay, cool. So very interesting. And well, tankers is a part of your basket. I think that's a very interesting area of investment. I've few investments myself there. And I was interested to talk to you about that because you've been doing like a ton of work in this space, and there are like very cool videos all on your YouTube channel. You're interviewing CEOs. You've interviewed like very bullish investors in this space, like Kelvin. I'm not sure about his last name.
Copy.
Okay, and Copy
Jay Mensmeyer.
Jay Mensmeyer, who's very a large service on Seeking Alpha too. So there's some amazing content there. And what got you started in shipping, or what attracted you in the first place?
Well, obviously the whole COVID situation made it interesting from the point of view of contango and floating storage. But as I do with everything else, I studied the sector in very detail, and I realized that there is a lot more to the thesis than just floating storage and contango.
Sure, there was like a story that was really big in around March and April. Can you explain a little bit to listeners what happened there, or why people are very excited about it?
Well, when the COVID situation came and we had to go on lockdown, there was a very sudden drop in demand for oil for obvious reasons. And because the demand destruction was so fast, the production side couldn't respond that fast enough. So this created the need for floating storage, and the rates for tankers went to the moon. They were as high as $300,000 per day. So those kinds of numbers.
Yeah, and a normal level would be like 30, 40K per day, right?
Right. And those kind of numbers attracted the people that were looking for a quick buck, and maybe people that didn't want to take the time to understand the entire thesis from A to Z.
Mm-hmm.
And when contango and floating storage started to go away because one, demand started to come back, and also the producers cut the supply or cut the production, that went away, rates came down, people panicked, and they've pretty much been panicking ever since.
Sure, yeah, the tankers have been declining over the last few months, as have rates. They've ticked up a little bit lately. And you think that people, just the type of investors that were attracted to like big money, it was kind of a fast money crowd, and they also got like bored real quickly when the rates changed?
Well, it's both the fast money crowd,
Mm-hmm.
but it was mostly retailers. Fast money crowd, people, in the industry, they call them tourists, people that don't understand the situation or don't want to understand it, or people who do understand it, but they just have a bearish view on it. At this point, I don't think there is a more hated sector than the tankers. Do you see anything more hated? I mean, people are happier to buy bankrupt companies than they are tankers.
I think energy is pretty hated too, but maybe like energy services. But it's not a loved sector, but it's also very small. Like it's not even many people are aware that it exists.
Yeah, but the people are more happy to buy the airlines or the cruise companies than they are to buy the tankers.
Yeah, that's true. But I think that those are like airlines are very much like a consumer, people come into contact with that, so they know it. It's like if you look at like the Robinhood top list, it's all these big brand names that people know from using the products, and then the shiny objects of new cool technology. But there's maybe a difference there.
I think that with the social media and instant gratification age that we live in, I mean, really, who wants to hold a stock for 5 years? I mean, they can barely hold it for 5 days alone, 5 years, right?
Sure. And in this case, you think, because I think we both agree that tankers is not a great business. It is a commodity business. Generally, if you hold those for like long periods of time, that's not great. But you see it a little bit differently in this case, right?
Well, you're right. It's not a great business.
Mm-hmm.
Yeah, but it's as far as right now, crude oil, it's not something that we choose to have. It's a necessity. You go outside, yes, the electric cars are the future, but as far as right now, for the next 10, 15 years, and oil is going to keep getting used. It's a necessity for driving, for airlines, for all sorts of things. Even in Europe, you guys use it to heat your houses. Um, so and we are in a situation where the industry went through a super cycle from 2003 to 2008. That's when the times were good. They were making a lot of money. Some of these companies went, like Frontline, for example, it was a 40 bagger during that time. And because the industry made so much money during that time, they ordered a lot of new ships, and it created oversupply of ships. And it literally took the following 10 years to work through that oversupply. And
Yeah.
in 2019, it was the first year that the things were coming into balance, and then the rates started to go up because of the fact that these ships are like humans. They are young, they are like teenagers, and then they get old. And when they get old, they become more expensive to operate. It costs significantly more to keep them compliant, and then they also are not hired as much. So it's natural that at some point when they become certain age, they get scrapped. and when they get scrapped, they get removed from the fleet. And because the last 10 years were so terrible, you know, the industry is now at a point where it didn't order that many ships. So now we are facing a situation where the order book is the lowest in many years. So the supply dynamic between supply and demand looks more favorable than it did in the last 10 years.
Yeah, and that's kind of interesting, right? Because we've had like these huge spikes in rates, like in March, but also at the end of 2019, and this sort of, because you can't solve like a undersupplied tanker market like in a few weeks. It takes months to build a tanker, and you can't build like a lot of them at the same time. So that potentially sets us up for more of these spikes, I would think. So,
well, tanker industry is a cyclical industry.
mm-hmm.
And cyclical means booms and busts.
Yeah.
And right now, people seem to think that it can only be busts, the bears.
Sure, but
The
so if
only
like,
busts. Well, when you only have busts, that
mm-hmm.
doesn't. It's not a definition of cyclicality.
Yeah, but so when you're, but like tanker owners should understand this, right? And so why are they not just ordering some ships already, because better times are coming?
With what money?
All right, so you think tanker companies have a lot of trouble getting money in the market right now?
Right. I mean, if the sector is the most hated sector out there,
Mm-hmm.
who is going to finance new ships? They don't have, the banks are not willing to finance it. Their equity is trading at less than net asset value. Everyone is freaked out, including the companies themselves. They don't really have visibility as to where are the rates going to go. Are we going to have more shutdowns? You know, we don't have the visibility. Then we also have regulation, IMO 2020 and IMO 2030. When it comes to the emissions, they don't even know what to order. So
Oh, that's like a super. I think that's like a super interesting point. Um, the IMO 2020 and 2030, those are regulations that, well, 2030 we don't know yet, but 2020 it limited like the pollution.
yeah, so sulfur content in the bunker fuel.
Sure. So, and there were a lot of solutions to solve that. A lot of different solutions. Companies pick different ones. But now going forward, there may be another round of regulation. While these ships, they go like 15, 20 years. So that's, you can have that your ship is worthless like the last 5 years. So now they're afraid of those regulations, right?
Well, I mean, a quarter of the fleet is 15 years or older. So if you own a ship that's of that age, you have to
Whoa. Okay. The connection disappeared again. We're back.
Can you hear me?
Yes, I can hear you. Can you hear
Right.
me?
Yeah. So as the owner of a ship, you are facing a decision when your ship has to go through a survey. Do I pay $4 million and do the survey, get the survey done to extend the life maybe for another few years, or do I just scrap it and get some money immediately? And if the rates are bad, the decision is more likely going to be to scrap it. If
Yeah, the
if you don't
scrapping
have,
rates, they also vary, but it's quite a bit of money usually.
yeah, they vary, depends on, the size of the ship and steel, but whatever it is, you're gonna get some money.
Yeah,
And every company has to make the decision. And if the rates are super high and the visibility is clear, then yeah, they might want to spend that $4 million. But if they don't know, um, they're going to think twice about spending that $4 million, because they could always take whatever they get, whatever they get from scrapping the ship. I mean, they could always take that money and put it into purchasing maybe another ship or part of a ship that's younger and has more years.
sure. And do you notice some scrapping already, or is it a little bit early since we just had like real great rates?
Right, we had real great rates, so you're not going to have scrapping when the rates are good, and now they're obviously coming down. So we just have to wait and see. If the rates stay bad, there's going to be scrapping, no question about it.
Yeah, and now are you seeing like an uptick in orders because rates have been good, or?
No, it's I don't see much. I was actually talking to one of the executives yesterday, and that executive told me that he's shocked that there's just so little ordering. I mean, it doesn't surprise me.
Okay,
You
and
know?
why do you think they're not ordering, or what is your sense that what
Well,
are?
for the same reasons I said, they don't have the money. And
Mhm.
the capital markets are closed, both on the equity and credit side, and there's just no visibility. If these companies, what are they doing with their cash flows right now? If some of them are paying down debt, some of them are buying back shares, some of them are paying dividends. That's what they're doing right now. Ordering new ships at this point of time, it's not on the radar screen. It will be in the future,
Right.
probably, but not at this point.
Yeah. And does the regulation like heavily factor into it, or not, is it more of the financing?
Financing and uncertainty.
Cool. And what are like your favorite positions in the tanker space?
Uh, I don't have a favorite position. They're all like wild animals. So
You just bought every tanker stock out there, or?
I have 5 of them. I have a DHT, Frontline, Scorpio, Euronav, and TK.
Okay.
And
So,
I don't particularly favor one over the other. It's just
but these are
holding a
fairly.
basket of them is fine for me.
And if it's fair to say, if I say these are not the rock bottom cheapest in the industry, but they are large, kind of reliable as far as the um, sector is, and they have like large fleets, mostly VLCCs. Scorpio is different, and TK is different. Is
Right.
that
So
correct?
yeah, so they're all different, and you're right. For example, when you look at Frontline, it's obviously not as cheap as the other names. Um,
Mm-hmm. It's
but
kind
I
of
the way I
has a
the way
kind
I
of
look at Frontline,
celebrity. Yeah.
the way I look at Frontline is the number one tanker company. So I always feel like it will always have a premium, and they all move the same.
That's sort of a
You know,
famous chairman, right? Who's like a legend in the shipping industry
right, right,
or major
and and
shareholder.
and I actually like the fact that I'm getting dividends from Frontline. I know that some people uh, would prefer buybacks, and if they do buyback, I take the buyback. But if they pay me a dividend and I take that dividend and I just either can buy more shares of the same thing or reinvest it in other names that have good potential. So I take it what they give me. TK is repairing its balance sheet. I'll take that. Euronav just did the buyback and pays dividend. I don't like the dividend for Euronav because Belgium takes so much of it, but you know I'll just take what I get. And with DHT, you get a combination of both. And then Frontline, so far, it's been mostly dividends.
Cool. Yes, super interesting. What would like derail the whole tanker trade for you? Or is there anything that could get you out of a name or out of the whole sector?
Well, the way I see it, what would derail this is we never come out of this COVID. We never get a vaccine. We're always going to stay home.
Mm-hmm.
You know, I like to have a more positive outlook on life. I think that we have smart people around the world, and they're going to figure it out. They're going to figure out a way how to get rid of it. They're going to find a vaccine. You know, I am positive on that, and eventually, well, and even right now, if you look at, we're supposedly, you know, on a lockdown, right? Maybe going into another lockdown, and I go outside and there's so many cars on the road. I can't believe that. I don't even know what the hell these people are doing. Like, well, where are you going? But they are, and they're driving, and I don't know, maybe they're bored, or maybe people that were taking public transportation now don't feel like that. They don't want to fly, so they drive everywhere. I had some of my friends, instead of flying 2 hours, they drove for 30 hours. So you know, we're using oil, and I just, you know, I know that when certain situation is happening, some people think it's going to keep happening. I have the view that humans are smart, and they will figure out a way to solve this problem. That's what we've been doing for thousands of years, solving problems. And that's why our standard of living is higher, because someone else solved the problems for us.
Yeah. Okay. I get like the danger of COVID. Very interested in it, but tankers wouldn't be the only thing that would suffer if it's really bad. Yeah, it's not a unique problem to this sector. I think it's fair to say. Before we're running out of time, I wanted to quickly ask you about some of your other interests. Do you have a little bit of time left, or do you need to go?
Yeah, go ahead.
Yeah. You also have a very interesting copper play, Oracle, it's called. I think. Can you tell us a little bit about how you got interested in that company, and what's your idea behind it?
Well, the way I got interested in Oracle is I wrote about it in the newsletter that I used to write in the past, and I kept following it over the years because Oracle did a transaction with another gold company. They sold another company a property, and as a result of that, the shares got exchanged, and Oracle became a shareholder in this other company. And I was invested in this other company, and every month I would call Oracle to find out if they heard anything about this other company, because they actually share the same office with each other. So it was my scuttlebutt, and over time, I heard bits and pieces here that the company was involved in something else, and then I searched for I made a video about it, how I got involved in it. But anyway, I connected the dots, and I realized that Oracle was involved in this big copper play, and no one was aware of it. And because I was following the company so closely, I was like the first one in. And now they own this huge copper play. And when it comes to the copper play, let's look at what's happening in the world. We have a situation where everything is going electric, right? We have cars that are going electric, and everything with a cable that goes
If I
into
look at the stock market, everything is going electric.
Everything is electric, right? So electric means you need copper, and there are not very many copper deposits out there. So the major mining companies are scrambling for copper projects, and Oracle's project has been out of the public market for 20 years because it was tied up in a 20-year long legal battle, and they solved that problem early, right before COVID, like literally a week before COVID hit. They 100% solved the legal problems, and now this property is coming back to the public markets during the time where the majors are scrambling to acquire copper assets.
So I've noticed M&A is kind of dead, which is a shame. But it's not dead in the mining sector. I've seen a lot of gold deals happen. You've also seen some copper deals happen already, or you just think those will follow in the coming years?
Well, the price of copper increased about 45% over the last since March. So now it's knocking on the $3 per pound price, and so you can expect that's going to get the merger and acquisitions are going to get heated up, because the major mining companies are just like everyone else. They're interested to do deals when everyone else is interested to do deals.
Yeah, when the outlook is good, they want to buy the
right
assets.
So I bought Oracle when no one knew about it, when the outlook wasn't that great, and now I will be very happy to sell them. Oracle, I will be very happy to sell it to optimistic buyers that have a very fabulous projections for the future.
Cool. But then, okay, I'm going to play a little bit advocate of the devil here, but in the junior mining, one big problem is like dilution. How do you protect from that, or what is your why do you think that won't be a big deal here?
Well, dilution is part of the game. That's the way these companies operate. When you think of companies like Oracle, for example, they don't have a core business. They are not a producer. They are an asset play, right? So the only way they can progress the asset is to spend money on this asset, which means they have to raise money and dilute. That's just the way it operates. If you found gold in the backyard, it's gonna cost you money to dig it out. So you can either bring your own money, or you have to bring in someone else to give you that money. But for that, you have to give them part of the project, and that's just part of the game. And it just kind of makes me laugh when people talk about dilution. Well, when you talk about dilution in the junior mining space, that means you don't know anything about the junior mining space.
Well, okay, and then to continue a little bit on it, of course, some of the dilution happens, and I think, but there are like instances where the project comes to fruition with the right amount of dilution, and you make money, even if you're an early investor. But there are also myriad examples where you don't make any money if you're an early investor, or very little, because there's just enormous amounts of dilution, and you're like a super concentrated investor. So I think in some way you've got comfortable with that the dilution will be reasonable, or it won't hurt your ultimate outcome. And is that just because of the enormous value of the asset, or what gives you that confidence?
Well, when it comes to the dilution on this, I know how much money they need to spend. So I have a certain calculation as to how many shares will be printed. And that's how I base my valuation. What's the asset going to be sell for? How much they have to spend to get it there, and how many shares will be at the time of completion. And with the case of Oracle, I think they're going to sell it anywhere between $600 to $2 billion, $600 million to $2 billion, and there will be about 200 million shares at that point. So you can do the math.
All right. And do insiders play any role in your view, or like how they are incentivized, or maybe the share ownership?
Well, pretty much their entire net worth is tied to Oracle stock. So yeah, if they don't make it successful, their entire net worth is affected.
Okay, that helps. And I've also seen a video where you compare this asset to like a ton of other copper assets in the world. What did you learn from that analysis, or what's stood out to you?
That Oracle or Santa Tomas is the best project in the world that is not in the hands of the majors yet. That's what I learned.
Okay, and what makes it like the best project in the world in your view?
It's in a very several things. Very good infrastructure, close to the power lines, close to the ports. Topography is very good. It's on a hill, so it doesn't cost as much to extract the material. It has a lot of exploration potential, and we already know that there's a huge amount of copper already in the ground. It's not a play, because I don't get involved in exploration plays. It's not something that someone comes to you and says, give me $1 million and I'm going to put a bunch of holes into the property and we'll see what we find. No, we already know that this is a huge copper project. We already know that based on past studies, that it has a net present value of about $1.6 billion at the current price. And we already know with 100% certainty that the project will get bigger. So right now it's getting discounted for two reasons. One, exposure, and it's getting more and more exposure, probably a lot because of my videos. And two, the reports, the technical reports are out of date, because the last time that this property was drilled was more than 20 years ago, right before it went into this entire legal battle. So because the mining companies, they are not in the business of they're not business of speculating. They are in the business of acquiring assets that are de-risked, and assets that have up-to-date reports so that they can beautifully calculate. See, the major mining companies are not looking for huge returns. They're looking for 20% IRR return that's safe.
Yeah,
and that means they have to have reports that are up to date and 43-101 and all that stuff. So Oracle is going to package it, update these reports, so that the major mining companies are comfortable going to their board of directors and pitching it to their investors.
Sure. Okay, that's makes a lot of sense. The last thing I wanted to talk to you about is maybe Mitcham Industries. Do you still have like a few minutes left, or?
Yeah, sure.
Yeah, cool. Like the final part of your portfolio maybe is Mitcham Industries. Yeah, please explain why you're invested there and what attracted you to it.
I've been following Mitcham Industries from 2009. So they were in a different business. They were in the business of leasing seismic equipment to the oil and gas industry. And in 2004 or 2005, I don't remember, they acquired another company called Klein, which is in the business of selling, designing, whatever, SSS, which is side scan sonars for vehicles that go underneath the water. So they're like UUVs, underwater unmanned vehicles, or SUVs, which is surface unmanned vehicles. And they are used to create a picture underwater. And this industry is about to go through a huge growth phase because all the navies around the world are in the middle of upgrading their fleet to include those kind of vehicles. And
okay, so those are like underwater drones, and they're building them.
right, you can call them drones, right? And so the navies around the world have been spending billions of dollars testing, studying, researching what it is that they want to order, and they are about to go into the purchasing mode. And a company like Mitcham has a division, Klein, which sits right in the middle of all this, and it's going to be needed to provide sonar systems for these vehicles to be manufactured and delivered to the navies. So that's on the military side, but then there is another side, which is SUVs, which are used for commercial surveying and all sorts of other things. That market is just exploding right now all over the world. So on the defense side, we're looking at UUVs that can cost anywhere between $2 to $10 million for one drone, and on the commercial side, SUVs, which are surface underwater vehicles, they can cost anywhere between $100,000 to $400,000. That market is much bigger in terms of volume than the commercial side.
Yeah,
but both of these are in the middle of, they're just about to explode, and Mitcham Industries is sitting nicely in the middle of all that.
And you said that they're like going to experience growth, or in the middle of experiencing growth with these commercial vehicles too. And do you know why? Is it because of wind farms, or I'm just making things up? Because it's not because of offshore. Why do commercial players want these now?
I mean, there are many different applications for these vehicles. Like mapping out the ocean. I mean, the list goes on and on. People should just look at these things themselves for what the applications are.
It's not one huge industry.
No, it's not. It's not just one usage. There's plenty of uses for it. I mean, I don't know if you just recently there was this incident where Naya Rivera, who is an actress for Glee Club, she drowned in a lake like 4 days ago, and they were looking for her body, and they were actually using these vehicles to find. So they're used for research missions, to find mines, for oil and gas exploration. I mean, yeah, the list list is very big.
A lot of applications where you could have used divers, you can use these, and
right.
A lot of instances
you can use them instead of the divers, or you can use those vehicles with divers. I mean, unmanned vehicles are without diver, and then you have manned vehicles where the divers are holding onto it. Yeah.
Okay. And because if it's got a bright future, it's super expensive, or it's still early in the story?
Oh, it's very early.
Sounds like it's really cheap, or?
Well, I mean, people are just learning about it. I mean, my channel is the first place most of the people learn about it.
Mm-hmm. Because this company has a market cap of how big is it?
About $20 million.
$20 million, and is profitable already, or still investing?
So they have two divisions. Well, two divisions, but really three. They are going through a transition where they used to be a lessor of seismic equipment to the oil and gas industry, and that business, they have been selling off the equipment to get into this new division, which I just said. And if it wasn't for COVID, they would have already been profitable in the first quarter of this year. And so that kind of, put things on hold. So it's a situation where the company right now, when you look at the financials, they look really bad. When you study what's happening, you realize that as long as they are able to stay in business, the future looks really good.
Cool. Yeah, it's by the time the financials look great, the opportunity is probably gone. So thank you. Yeah, I think I want to wrap it up here and don't keep you any longer. I want to thank you so much for coming on. It was a great pleasure. Where can people find you, or watch your videos, or read about your ideas?
So my website is classicvalueinvestors.com, and once you visit that, you will clearly see my videos, and that's how you can find your way into my YouTube channel.
Oh, you have a YouTube channel and you're on Twitter, and I'll put those in the show notes so people can easily find it. Well, with that, thank you so much for being on, and bye-bye.
All right. Thank you very much.